Welcome to Front Seat again. This week we have Guldem Atabay online from Turkey. Hi, Guldem.
Hi, Mark. How are you?
I'm fine. Thank you. So it's been a bit of a mixed week this week. We saw the central bank keeping interest rates unchanged, which was good news for investors, and the lira's rallied as a result. But we've had some pretty bad news on the economic data front, with industrial production down 6.5% and retail sales down almost the same at 6.3%.
Yes.
I know you wrote earlier this week that that this is a welcome move from the central bank. I mean, how do you think things will play with them going forward now, looking at the data and looking at the elections coming up?
Well, I'm sure the government is not really very happy about going to the local elections on the end of at the end of March with an economy contracting at this pace. But I think they have learned, especially our president, Mr. Erdogan, has learned his lesson well last summer, because he had meddled in so much with the central bank policy rate. And what we had at the end of the day was a currency crisis, and the central bank had to raise, we all know, the policy rates more than it could have gone away with. I mean, if it were to act in the spring months, it could be different. But with all the president's meddling in August, they have to hike the rates by 600 basis points to talk to the economy, and thus the contraction gained pace. So a similar picture is happening, but we see our presidents taking the sidelines this time around. So January was I think January central bank meeting was a litmus test whether the government would speak up about, Mr. Erdogan could speak up about louder on central bank policies. And the central bank could be inclined to cut the policy rate earlier than expected, depending on the level of the inflation. But that didn't happen, so it was, I think, good news. So we don't have a central bank monetary policy board meeting in February, which is another good news. I think the market will be less stressful. We have one in mid-March, which is just before the elections. But then again, I wouldn't think the central bank would ease the policy rate on that one as well, because it would just hurt the market and wouldn't help the government on the election front. So where we're left is in the second quarter of the year, or starting in the second half of the year, I think the central bank will have the room to cut the policy rate depending on the pace of the inflation. So this is all making sense. It's rational. It's orthodox. So there's no problem with this. That's why the lira rallied, I guess.
Yeah. Do you think Erdogan will increase investor kind of nerves again before the elections with more rhetoric about rate cuts, or do you think he'll keep his mouth firmly closed as he has been doing the last few months?
Well, last 3 months I think is a good example of how he was hurt by the market reaction to his rhetoric. So we have seen Mr. Albayrak, the Treasury and Finance Minister, saying that the central bank is autonomous, so they wouldn't comment so much or anything about central bank policies, as if it was not autonomous before. But I think that's a good thing, that it's a good sign that I think our president will just let the central bank do whatever it takes for it to do in terms of the inflation rate. But then again, they have the tool of the fiscal policy tools at their hands. They don't need the central bank policy cut. Even if the central bank was to cut the policy rate, it was going to be a very tiny one, around 50 or 100 basis points. So that wouldn't really help the government on the economy front immediately anyway. So spending with the fiscal tools, I think it's more easier, more preferable at this stage for the government. And they are doing it to a great extent with the tax cuts and everything, all the stimulus packages announced almost each day. So I think that's their preferred game plan up until the local elections.
Yeah. I mean, personally, looking at things, I wouldn't be surprised if the central bank did cut rates by 50 basis points before the elections, because it will give Erdogan a carrot to provide to voters to say that, yeah, things are improving. I mean,
Mm-hmm.
and will the market really take it that badly? I don't know. I mean, they know that rates will come down later this year. It would depend on the messaging from the government, perhaps.
Perhaps, but what we saw since the start of the year was the lira was again among the worst performers amongst the emerging markets currencies. It was just because of the speculations about the central bank rate cut and earlier than anticipated rate cut. So if there was a rate cut in March just before the elections, my opinion is kind of different from you. I think the market reaction will happen and they will enter the elections with a more volatile, with a little depreciated lira. I don't think it's a very good scenario for the government. So what they're doing, on the other hand, is they're reducing the treasury bond rates through various operations, and that's another way of pulling down the interest rates, which is not really effective in the economic environment that Turkey is going through, but still they are selling it as if it was a successful story, or it depended on some recovery in the economy that rates are declining for the treasury bond yields. But it's not actually, it's just treasury operations. So I think no rate cut before the elections.
Yeah. I mean, one thing you mentioned, other people mentioned, talking about how, talking about budget spending is that things may not look that great in the rest of the year with the economic contraction that's going on. I mean, the budget data for 2018 showed them missing the target by by about 10%. Of course, that was the original target at the beginning of the year. They met the revised goal, which was set only in September. So, I mean, that's only 2 or 3 months ago. And I think people could have predicted that anyway. And then we had spending up by 22% during the year. What was interesting for me was that revenue was up 20%. I mean, that almost kept in line with spending. I mean, where's that revenue coming from, do you think?
Well, it's not the tax side. It's non-tax revenues with all these amnesties and restructurings of the social securities and this construction amnesty going on in Turkey, which was extended for 6 months into 2019. So what they're trying to do is they're trying to raise more revenues for 2019. When you see the especially December consumption tax performances were terrible, awful. In real terms, 30%, 60% down on value tax and consumption tax revenues. So this is the picture that will even get further for the worse throughout the first half of 2019. So this central bank profit transfer that made earlier, that was pulled earlier into January, February, compared to April, and this extension of the construction amnesty are all efforts to spend ahead of the elections, I guess. But if there's no other revision, like in September or October, it's very hard, I think, for the government to pull down the budget deficit to GDP ratio to its target level of 1.8%. Rather, I think it's going to be slightly above 2%, which is higher than 2018. It's not the end of the world for Turkey because it's still below the European Union criteria of 3%. But we have a loss of control on inflation, a current account deficit, yes, normalizing, coming down because of economic contraction, and further deterioration on the fiscal front, I think would keep Turkey's risk premium elevated. So that will be the combination.
Yeah, I mean, clearly, the kind of revenue that they're getting is not high quality revenue, right? You mentioned that a lot of it is from amnesties, and at the same time, sales tax revenues are going down. Probably, I don't know about corporation tax. I didn't look at the details, but it's looking pretty tough for the government after the elections. And then, of course, on the corporate side, we had Koç talking this week about how FX debt is playing havoc with Turkish corporates' balance sheets, and they're finding it difficult to access foreign credit. I mean, normally Koç is pretty conservative, and for them to come out and talk like this, even is in a slightly guarded, conservative way is a
Mhm.
little bit concerning. What was your impression?
Well, I thought the same thing. It was interesting to see Ali Koch speaking up. As you said, as the organization, as the company, as family, they're rather more political in these kinds of speeches. But we know the truth. We know that Turkey has a corporate debt problem with FX debt payments to
Yeah,
abroad, and all this it's restructuring from the market rates. It's debt payments down in 2019 to Turkish banks are all problematic, and that's why I think the markets are now waiting for the time after the elections, whether the government would go real with this debt problem or would just try postponing it through all these restructuring efforts. But despite that, we'll see the bad debt of the banking sector rising, doubling by the end of 2019. And that's why the IMF option is still, I think, is on the table, which the government is not really mentioning, apart from rejecting the option ahead of the elections. But I think the post-election period things will change in that rhetoric. Things could change in that rhetoric because I think Turkey needs external funds to deal with this debt problem, and we'll see about that. I think the election results will say so much about whether the government could go for the IMF or not, because I think the economic contraction is affecting the AKP's votes.
Yeah, sure. And then they don't have another election for quite some time. But still, like you say, that there are funding issues. And Koch was talking about how they need. He mentioned briefly about the possibility of the IMF in a kind of convoluted way, political way, and he also talked about how the government needs to come up with a clear timetable of clear action, which
Yes.
Al-Bayrak may contest because he's already announced his economic program in September with some goals, but of course we see there that there isn't a calendar, and investors may well want to see this. I mean, what do you think the government needs to do in terms of the kind of actions they need to take and the time frame in order to avoid an IMF program altogether?
Well, what we're seeing since last September, October, with the announcement of the new economy program, they had calmed down the markets with a rate hike and then with a medium-term fiscal plan. But what we're seeing since the start of December is these ad hoc measures, steps each day. It's like I feel like some lobbyists or some groups are talking to the government, and they're all crying out because of economic contraction, and the government is just taking ad hoc steps, that the stimulus packages that do not add up to one logical plan at the end of the day. So we need to first have a credible, transparent economy game plan for covering a couple of years' time, addressing to the debt problem with credible resources supplied in that program, either with the IMF or without the IMF. But if without the IMF and there is no such program, I think it's inevitable that Turkey will need to knock the doors of the IMF at some time later in 2019, because it's all keeping the economic growth very, very weak, and it doesn't bode well for AKP in a political way. The AKP just can't say that we have lent the IMF good enough money, so we're using it back. That's something that they can create a story for their voters, and I think it's still doable, but we'll just have to see.
Yeah, I mean, clearly there may well be a funding gap, and like you say, it's on the corporate side, rather than on the government debt side, where there's a shortfall and a problem, and it needs to be addressed. What about just coming back to next week briefly before we sign off, Guldem?
Okay.
We've got consumer business confidence coming out, the data. That's probably going to give us a further sign of perhaps weakness in those areas. How do you think it's going to pan out? I mean, some of the data for December, for instance, has been a little bit positive month on month. For instance, retail sales, it's looking a little bit soft, like kind of a soft landing from December compared with the economy's performed in October and November. I don't know what you think, but
well, I mean, yes, we can see some form of, I wouldn't say call it a recovery, but some form of stabilization. First, we have the last summer's shock. It had its toll on throughout October, November, and December. And now what we're seeing is Turkish lira kind of stabilized around against the US dollar at 530, 550 levels. And the interest rates are not high, are increasing anymore. They're marginally coming down perhaps. And the government like announcing many packages to support demand, which is not really reacting in a very strong way. So a mild recovery in consumer demand or in consumer sentiment is possible, but that wouldn't mean that Turkey is switching at full gear towards positive growth. I think negative growth, contraction will be here to stay for a couple of more months, well into 2019. So that kind of marginal recovery is just because of the relative stabilization that the government has tried to create ahead of the local elections.
So you think there'll be a quarter-on-quarter contraction in the first half, or what kind of contraction are we talking about?
I think it's going to be stronger than the last quarter of 2018. So looking at the PMI data, it confirms. I think it's going to be around 45% GDP contraction in the first quarter of 2019, if not stronger.
Right. I mean, I've had, talking about this contraction and the performance of the economy and perhaps the stability of the lira. I have one or two people contact me on Twitter this week, asking me about the lira, and I'm wondering, where it's going to be going forward. And one of them actually said, "Do you think it's going to hit 7 again?" What do you think about how things will pan out for the currency this year?
Well, it's a tough question, Mark. But I think Turkey is again relatively lucky, looking at what the Fed has been announcing recently, that there might be some pauses in the rate hikes or delays in the rate hikes. Whether they do it or not, I really do not know. But 2 more rate hikes looks possible, but perhaps with some pauses to the rate hike cycle. That would give Turkey and all the emerging markets, I think, a breather. We're seeing the Chinese support coming into the markets, again flowing into the fiscal market support to the emerging markets, changing the sentiment in the emerging markets, the flows, so that the flows are looking relatively positive for the emerging markets, including Turkey, compared to last winter months. But then again, this is a positive for lira. Looking at the negative side, if you are to see the AKP's votes coming down below 50%, 49 to 30-something levels at local elections, if we see they're losing big cities like Ankara, Istanbul at the municipality elections, and if we are to end up with a no IMF program, I think the lira has further room to depreciate. I don't know if we can hit 7 or higher, but I think 5.5 levels will look unsustainable if Turkey doesn't really address this corporate debt problem right after the local elections. So I think 6-point-something levels look more feasible to me. Yeah.
Just finally, we've seen the stock market rally this week, and there's been a substantial rally in banks. Now, investors were talking a few months ago that perhaps Turkey had further to go downwards before they stepped in and started buying assets. But it appears that there is some foreign inflows into Turkish banks now, into Turkish corporates in general. That might suggest that they're thinking that perhaps the worst is over for the economy as we go into 2019 in terms of looking ahead at at a slightly longer term scenario in terms of investing in Turkish companies. What do you think?
Well, I think it's the general emerging market sentiment, as like a couple of minutes ago we talked about, and Turkey is in that universe. So I think it's not very special to Turkey. But when you see like 6.5% December industrial production contraction, one would think, okay, a couple of more months, and then because of the base year and rate cuts would begin, so the Turkish economy would shift into the positive territory. But how much, to what extent, is not really being addressed at the moment. So I think growth, if it is to come in the second half of the year, which looks probable, I think it's going to be very weak. The banking sector is still not really lending to the economy. All they do is restructure the corporate debt at the moment. We see the public banks trying to stimulate the economy, but at the cost of what, we don't know. So these are all the questions that will be answered later down in the second half of the year. So in the meantime, I think it gives a room for the equity market to rally in Turkey, but I doubt that will be very sustainable without a very credible program that will address the real issues. So yes, we don't have the current account deficit problem anymore. It's going to be around 20 billion, 15, 20 billion, something at the end of 2019. But then we still have the corporate debt sector, debt obligations around $200 billion for this year, sorry. So that remains as a very big chunk for the whole economy. So I don't think that kind of rally is really sustainable unless the Fed makes a very positive surprise, decides not to have further rate hikes that will give a boost to the markets on a global scale. And Turkey would join into, but Turkey-specific reasons, I don't really agree.
Yeah. I mean, well, hopefully the worst is kind of approaching us. Personally, I think perhaps that AKP will retain those major cities in the elections. And then, as you say, I mean, they may have a foothold then to go to the IMF. Of course, at the moment it's unclear, and if they did, of course, that would be very positive for the markets. But it looks like a very interesting year ahead, and hopefully a positive one. And hopefully, thanks very much for talking with us again this week, Guldem.
Thank you for inviting me, Mark.
Thank you. Take care.
You too. Bye bye.